Hey, what's up, guys? My converted text here, and in this video, I'm just gonna show you a trade that we took last week, this previous week actually, Sunday night. I know too late for me to upload it, but I'm gonna upload it anyways. So the thing is, just busy with some personal things, and yeah, man, this is the signal that I give my free television channel. You can join in here. The link is in the description. And this what you get setups. You come with entry and stop loss. You will just use your own price according to your broker feed, right? So this is the signal was taken. I think it was on a Monday. And it first called this trade. It's around Monday night. It's around 9:30 p.m. in South Africa. So Johannesburg time. So this is how the trade went. And even went furthermore, but let me just get into the trade and show you what really went down over there. So we're gonna head over to the Nasdaq. Let me remove these. Nas 100 on this side. On this side, I'm gonna put the S&P 500. Right. So I'm just gonna show you how I came about the idea because we sold from. We go to 30 minutes time frame. We sold from there, right? And then the TP was here. It was below these lows. I mean, on this other block, but eventually I was looking for it to come and take out the sell side for our time frame, and that's what I've been discussing with one of my people that are in my group privately. This is where is that? This is some of the trade ideas you can see from there. He was showing me the setups and we were discussing those. So basically what happened was I'm just gonna hit the daily time frame, right? So on the daily time frame on this day, on the 11th of June, it was a Thursday, I saw this this candle, bearish candle engulfing the previous bullish candle and with strong momentum. You see the momentum in this candle. I saw that. Not only did that happen, 17th, this was Thursday, this on a daily. Yes, this was the same day. So when I saw this engulfing news, I realized that this could be like a bearish order block since we have this very strong engulfing trend of, and this could give us like the market to drive down, to tap into this liquidity, fair value gap there, and there's an order block there, and also check out the sell side liquidity here, and you could possibly see the market coming into these areas right here, right? So on this, the S&P 500, it didn't really end out the previous candlestick. That's why I was looking forward to trading Nasdaq, right? So what we now had was when we head to the 4-hour time frame, it was the 1 hour. Just correct. Okay, let's just go back to the 4 hour real quick and see some things. So what happened was on this day right here. So now I'm just gonna close this S&P and make this another chart a little bit bigger so that we can get a clearer picture of what I'm trying to make you understand here. I'm a little bit rusty. It's been a while since I made a video, so please bear with me in my explanations and stuff like that. So on the 4 hour, you can see that you have a high, you have a low, you have a high, you have another high, break the previous lows. We have a fair value gap. This could be your breaker, and this could be that fair value gap. It didn't hold price to the upside, so it's most likely to hold price to the downside. But when I go into the 30 minutes, because I was looking into 30 minutes when I came back into the zone. The other thing about it is that you're not supposed to just budge when this happens because it shows you the great momentum even in a higher time frame. So you just look for the opportunity, right? So now we have a this high and then we have this low, right? So the market retraces back into what the 50%, the 50% of the trading range, right? So when we get in here, right? So when we get in here, you have a high, you have a low, you have a high, you have a low, break of a structure, fair value gap. Most people getting into it at this point. But for me, I also like to consider other factors. I watch what the S&P is doing. So for me, the S&P on this point, it went above this high on the S&P. It went above that high, gave you the shift of structure above that high, which shows that the S&P is the one that is likely to get too liquidated compared to Nasdaq, because sometimes you get liquidated, you take a trade in the right direction, but it takes you out before it goes to your anticipated direction, and you wonder why. So if you're trading like one of those Wyckoffs, you can still see like this could be a PSY automatic, your automatic rally, I mean, buying climax, automatic reaction, STB, and whatever. But so when I had this, usually in the videos that I used to make, I used to tell you that when the market gets into a price of liquidity, it has to create its own liquidity to take it out before it reverses, which means if the market is trading above a high, I expect it to create a new high, trade above the high. Let me just show you like this. If this is the high, right? And then we're taking out the buy side liquidity like this. So I expect the market to trade something like that, new liquidity, take it out as well before reversing. This is what I actually want about prices of liquidity, right? So trade into that, create a high, comes and takes it out. So another entry, I bet you if you can go to a smaller time frame, if you get a candlestick like this, it's much safer to take this entry at this candle and put your stop loss above that candle. But that's another story. That's a story for another day. But I bet you if you go into a smaller time frame and check this, what happened here, you will get your setup to go short there. want to show you a little bit of something. You see, you still get a chance to go short there. The order block with the fair value gap, because since you had this break up structure here and the momentum to the downside, the fair value gap with the order block with the fair value gap with the opportunity to go short. So now let's go back to the main area. So now we get into the zone. We test this fair value gap once more, because one other thing is that we don't want to enter here and have to put our stop loss all the way there, right? So when we get into that zone, the price action, the fractal for entry is always the same. It's the same. You can see here, you have a buy side liquidity, market structure shift, you have a fair value gap, you take your entry, you put your stop loss. This is how I prefer to put my stop losses, right? The candle that created a fair value gap, the candle before it, right? The candle that birthday candle that created a fair value gap, that's where the stop loss has to be put above it. That's why the stop loss is here. As you can see, the entry stop loss is there. Doesn't change, right? So you get your stop loss, you just hold the trade, right? The trade is still doing pretty much the same thing, trading into a fair value gap, creating a high, coming low, fading to take out this low, take out the buy side liquidity, still gives you another opportunity to enter here. Fair value gap, and then test the fair value gap, we're still going short. So we went short all the way. This was Wednesday, yes. The TP hit. This take profit hit around, because on Wednesday, yes, on the third day of the trade. But if you had held onto this trade, you would have gone all the way. You still be in the trade even now, but it's not about that, right? So the trade went beautiful all the way. So the main objective was, as you can see in here, I think it was around when we had this take profit. I was thinking that the next day maybe we could get a little bit of retracement. I think I did this on the 4 hour. I thought, yes, a little bit of retracement into that and then continue go lower to take out the sell side liquidity before coming back into that range, right? So that's pretty much the trade, the sell. If you want these free signals, just hit the link on the description and follow the link to the Telegram group. Yeah, man. That's about it. That's about it.